Time for a recap of what we have done so far. We prepared our chart of accounts in QuickBooks, added our vendors, customers, employees, recorded our bills and invoices, imported bank statement and categorized bank transactions, and reconciled our bank account. We are nearly at the end of our bookkeeping process for October 2024, and the last thing we need to look at is fixed asset depreciation. JD Handmade Essential purchased two assets so far, two laptops on 5th October, and they booked it in IT equipment and tools. Let's go there. Bills. We bought it from Computer City. As this is paid, this will not be under for review or unpaid. It will be under paid. So this is our computer bill. Let's open the bill. This is booked in IT equipment and tools. We see what we have purchased: two MacBook Air. We have the serial numbers. One will be used by Janet Baker and another one will be used by David Hudson. As per IFRS 16 property, plant and equipment, there is no depreciation charge in the month on which an asset was purchased. Therefore, no depreciation charge for these two laptops in October 2024. However, we will look into the ways in which we can automate the depreciation charge process in QuickBooks. We can do this in two ways. One, through our recurring journal process already that we have already saw in our prepaid amortization. This is the one. We can replicate it and alter the GLs to use it as a fixed asset depreciation recurring journal entry. But as we have already familiar with this one, let's try fixed asset module. We can go there by advanced accounting, then fixed assets. We can also add multiple assets together. Let's add one by one. So first thing is our asset name. So what is the name of our asset? It is a MacBook Air, and asset code will be, since this is a laptop, let's assume it's LP, and this is our first laptop, so 001. This is our asset code. In description, let's add serial number of the asset. We can find that from our invoice. Let's select the first one, copy, paste it here, and add the user. So the first laptop will be used by Janet Baker. Definitely this is a non-depreciable asset, but if we click that, what happens? But if we click that, what happens? Purchase price, we can put it in. Purchase date, we can put in. But depreciation start date is now no longer editable. Method is locked. So basically, if this asset is not depreciable, we can just simply add it as an asset and it will stay here as long as this is in our ownership. So let's toggle that off. So purchase price, what is our purchase price? $1,000 per laptop. Purchase date is 5th of October. Depreciation start date, no depreciation in October, so it will start from 1st of November. Depreciation method will be straight line. Useful life 3 years. Salvage amount is 0. Asset account. Now let me tell you the mechanism of depreciation. Depreciation of an asset means we will distribute the cost of an asset over its useful life in number of months, and the resulting amount will be used to reduce asset from balance sheet and charge expense in profit and loss. The cost value of an asset is their purchase price, and that goes to asset account. For our account, for our case, It is IT equipment and tools GL, and our purchase price is $1,000. So we have our asset account here that will be IT equipment and tools. The value of this GL will never change. Now, then how will we reduce our asset from balance sheet? This is where accumulated depreciation, another fixed asset GL, comes into play. Journal of a depreciation charge is depreciation expense debit, and an asset offsetting negative entry will be accumulated in accumulated depreciation GL. In balance sheet, we will see asset account positive with cost value and accumulated depreciation account with a negative entry. And the sum of these two amounts will be our total fixed asset in balance sheet. So let's choose our accumulated depreciation account from here and our depreciation expense account. Our mapping is now ready. We can save this. Since two of our asset is same value and starting our depreciation at same day, we can duplicate this. Remove copy of. This will be laptop 02. This will be used by David Hudson. Rest, rest of the mapping is same. If we save this, now we can see year-wise depreciation amount and their journeys. Here on November 30th, asset value will be 1000, depreciation will be posted 27.78 USD, and remaining value of this asset will be 972.22, and the list goes on. It will end on October 31st. The balance will be 0. This is our fixed asset module. Journals will be pouring in from November 30th. Now let's look at our reports. We have some standard reports here, and we can create custom reports. We have management reports, and we have a tab for spreadsheet sync. Let's go to our standard reports. Two favorite reports are profit and loss, balance sheet, and accounts receivable aging summary. Let's go to profit and loss. So JD Handmade Essentials, profit and loss, October 2024. From our profit and loss, we can see we have made a revenue of 3750 out of selling lavender bars and a revenue of 3525 by selling spring breeze bar. So our total sale of product income becomes 7275. Cost of goods sold. If you can remember, we bought 3000 lavender bars and 3000 spring breeze bars, but we haven't sold all of them. The sold products costs are here. Let's validate this amount to our order sheet. Let's go to our order catalog here. Here we can see all the products we have sold. So we have sold lavender bars in total. How many bars? Let's filter it out. So we have sold in total 250 lavender bars. So if we multiply it by their cost price, which is 10, our costing of the sold goods is 2500. Similarly, if we filter out spring breeze bars, total quantity sold is 235. Once again, equal to 235 into 10 per bar is 2350. Total 4850. Does that match with our P&L? Yes, perfectly does. So this is our cost of goods sold. After that, we derive into our gross profit. We have our bank charges 55. We have professional fees, which is bookkeeping fees 300. Salary 5,000. Software subscription expense, which is QuickBooks fee for October 33.33, and office utilities 50. This one is utility share that Howard Baker invoiced us, and then rent expense coming from the rent bill also sent by Howard Baker. And together that brings us to our net other income, a negative amount which is loss 350, and net loss is 3313.33 in the first month of our business. Now let's go to our balance sheet. This is JD Handmade Essential balance sheet as of October 31st, 2024. We have 2520 USD in our bank account. Our receivable totals is 5850. We have inventory assets worth 500 and 650, 500 of lavender bars and 650 of spring breeze bars. Prepaid expense remaining 166.67, that is the remaining amount to be charged from QuickBooks subscription for 6 months. Fixed asset, we have IT equipment tools. We don't have any depreciation since this is the month these laptops were bought. We settled all our liabilities, so accounts payable is 0. Accrued payroll liability is also 0 as we have paid all our salaries. Then we have equity portion, capital injected by David Hudson 10,000 and from Janet Baker 5,000. Let's go to our client overview. This was our capital injection. And lastly, we have our net loss 3313. Let's go to our report section again and see our accounts receivable aging balance. So this is our aging balance. We have current accounts receivable 1050 from Juan Daura, Karuna 1500, and from Walmart 3000. We have one aged receivable from James Brown. This is one invoice. Invoice number is 1005. Let's go there. Yes, this was due on October 17th, but we never received this payment, so this one is overdue by, as of today, overdue by 20 days almost. So this is our AR summary. Let's go to reports again. We have countless other reports here. Also, we can make our own reports from custom reports. This is the end of the bookkeeping process for JD Handmade Essentials for the month of October 2023. If you like my process, do contact me through Upwork or LinkedIn. Hope to hear from you soon.